Both gold and stocks have been rallying together, but historically, they tend to move in opposite directions. Our next guest says the market may be getting the reason for the correlation wrong. Let's bring in Ruchir Sharma to discuss. Rockefeller International Chairman and Breakout Capital CIO. We've been asking this question, Ruchir, for a while, which is why gold and stocks and even the dollar lately have been moving hand in hand, because that doesn't always happen. So why do you think it is?
Yes, sir, that's correct. That stocks are partying like it's 1999 and gold is partying like it's 1979. And those two eras were so very different, with 1979 being associated with rampant inflation, geopolitical turmoil, in 1999 with the tech boom, which is what the AI boom, and also the relative calm of 1999. The only explanation that I get here is the fact that there's still massive amounts of liquidity sloshing around the system, and that's fueling momentum trades across different corners of the market. Because if you look at gold as well, I've been a bull on gold for the last few years, but my concern is that there's no good story that too much money cannot spoil. And I think that's what's going on, that the main demand for gold over the last few months has shifted to ETF demand. When the gold bull market started in earnest around 3 years ago, following the sanctions that the U.S. imposed on Russia, that was led by central bank buying. That central banks were diversifying their reserves out of the dollar. But last few months, it's really been a lot of ETF buying. In fact, the ETF flows into gold in the last quarter were the highest ever. So I think that what's going on here is there's still a lot of liquidity floating around the system. It comes from two sources. One is the legacy liquidity, which is still there after the pandemic, as I write in my article, that about more than $1.5 trillion in excess money is floating around in money market mutual funds 5 years after the massive liquidity infusion which took place there. And the second is the fact, yes, go ahead.
No, I'm sorry to cut you off, but usually when there's a lot of liquidity, which I get at that for an explanation, it finds itself to the riskier parts of the market, which it has. I mean, it's rallying at the same time as meme stocks and unprofitable stocks, as Lindsay Saunders was just telling us, and all sorts of corners, Bitcoin, more speculative corners of the market, not necessarily the one place people tend to go during flight to safety and for defense.
That's exactly, so you hit the nail on the head. That's exactly what's going on. The gold has now got caught up in this liquidity-driven speculative frenzy. So, and that's the point I make in the piece as well, which is that what will happen is that next year, let's say, that if inflation resurfaces and by any chance the Fed is forced to withdraw some of this liquidity, then the problem is going to be that gold will no longer act as the hedge. Because a lot of people who say they're buying gold say they're doing it because it'll be a hedge, that you can end up getting hurt in stocks, or the world is going to face much greater geopolitical turmoil or whatever negative reason you want to find. And you say that, hey, I'm going to buy some gold to hedge my portfolio against that risk. But my point is that gold's parabolic increase that's taken place in the last few months is not being driven by the traditional safe investors looking for just hedges. It's being driven by the same momentum retail crowd that's been driving up stocks as well. So on the downside, there'll also be a positive correlation. So that's the big change that's happened. And that's something we need to be cognizant of, rather than thinking that gold's going to act as a hedge on the downside.
Although for now, it's been a great hedge, Ruchir. I mean, anybody who's in stocks and did 10% GLD is quite happy.
No, absolutely. So it's not been a hedge, Carl. It's been a parallel trade, right? So that's the point, that everything is rising in sync. We've never had a period where, in fact, gold has outperformed stocks in a bull market. That's just never happened. So currently, everything is rising. So you're right that everyone's happy, but so are the AI traders, or so are people who are buying crypto. It's been like a everything bull market. As you've called it, I think, in the past on the show. But I think that what's happening now is that you're seeing this retail flow as well come through. And don't get me wrong, I'm still bullish on gold in the very long term. And I believe in a lot of the properties of gold as a safe haven. But my concern is that on the upside now, we're seeing so much retail flow and so much massive liquidity find itself into gold that on the downside, people will be surprised that there is also a positive correlation, at least for a while. So I think that's what I was trying to point out in the piece, that one, the only explanation is you have massive liquidity floating around the system as to why these assets are rising simultaneously when they rarely ever do. And secondly, then on the downside, be prepared that everybody will be unhappy rather than everybody being happy, as is currently the case.
Yeah, my favorite response last week, I asked Secretary Bessent why gold is up so much, and he said, more buyers than sellers. So how does it end, Ruchir, the correlation, the unusual correlation?
Yeah, it's amazing because, a lot of people used to point to gold, if you remember, Sarah, as an inflationary warning, right? That if gold is rising so much, that inflation must be on its way. So the way I think that this ends is that traditional inflation finally does show up at some point, possibly next year or so. And then when the Fed is forced to increase interest rates and central banks have to withdraw some of this excess liquidity floating around the system to fight that traditional battle, I think that that's when both stocks and gold go down simultaneously. But until that happens, I guess it's a party everywhere. And that famous line goes that we know that this party is feeling extended, but the clock has no hands. So currently, this everything rally seems to carry on, and the party just doesn't seem to end.
Yeah, I guess the question is, how bad is the hangover,
Yeah. But as I said, that the key thing is to watch is the fact that when do central banks feel inclined to withdraw all this excess liquidity from the system. But as we said, for now, it's like gold and stocks are both partying simultaneously like they've never done before.
All right, the best kind of parties. Ruchir, thank you very much for joining us.